Right now, someone watching this has a net worth of zero, maybe even negative. And someone else watching this, statistically speaking, is sitting on a couple million and still doesn't feel rich. That is not a contradiction. That is the wealth ladder. And the thing nobody tells you about climbing, it is this. The jump from $0 to $100,000 is harder than the jump from $1 million to $5 million. The physics of money are broken. And once you understand how each level actually works, what it costs to live there and what it takes to escape it, you'll never look at your bank account the same way again. Today, we're walking through every single level of net worth, from zero all the way to $100 million. And I'm going to show you what life actually looks like at each stage. Not the Instagram version, the real version, with real numbers. Let's get into it. Let's start where most people don't want to start. The bottom. About 13 million American households right now have a negative net worth. That means they owe more than everything they own. Their car, their bank account, their furniture, add it all up and subtract what they owe. And the number is less than zero. Roughly 10% of all US households are in that position. And some estimates say about 1 in 4 Americans has a net worth at or below zero. Now, let me be clear. This doesn't mean these people are stupid, lazy, or financially illiterate. A lot of them are recent college graduates, staring down an average of $39,500 in student loan debt before they've earned their first real paycheck. Others got wiped out by medical bills, others by a divorce. The system is not exactly designed to make this easy. At this level, your life is defined by one word: obligation. Every dollar you earn is owed to someone else before it hits your hand. Credit card interest, which now averages around $7,900 in unpaid balances per cardholder, is eating you alive at 20+% AP. You are paying for yesterday, every single day. The emotional weight here is enormous. You're not thinking about investing. You're not thinking about retirement. You're thinking about whether you can cover rent this month. And the national median rent just crossed $2,100 a month. That is $25,200 a year just to keep a roof over your head. On a median individual income of around $62,000 before taxes. That is brutal. The goal at this level is singular: get to zero. Get to a net worth of nothing, because zero is actually a massive accomplishment. If you're starting in the hole, you've clawed your way to zero. Maybe you've got a small emergency fund now. $1,000, maybe two. Technically, your net worth is positive. And psychologically, that changes everything. But let us be honest. $10,000 in net worth in 2026 is thin. One car breakdown, one ear visit, one layoff, and you're right back below zero. At this level, you're still living paycheck to paycheck. About 60% of Americans say they are. And this is the zone where most of them live. This is where the boring, unsexy stuff matters more than anything. Building a 3-month emergency fund, paying off high-interest credit cards, not investing yet, stabilizing. Most people skip this step and throw $50 into a brokerage account, while they are still carrying $8,000 in credit card debt at 22% interest. That is not investing. That is cosplaying as an investor. Your balance at this stage, if you are under 25, is likely somewhere around $6,900 on average, with a median of under $2,000. You're at the very beginning, and that is okay. But you have to play defense before you can play offense. This is where things start to shift. Between $10K and $100K in net worth, you cross from survival mode into building mode. You've got a financial cushion, not a huge one, but enough that a flat tire doesn't derail your month. Let me frame this. The median net worth for Americans under 35 is $39,000. So if you are 28 and you hit $50K in net worth, you are already ahead of more than half the people your age. That is not nothing. At this stage, your life starts to look different in small but meaningful ways. You might be contributing to with an employer match. The average balance for people 25 to 34 is around $42,600. Maybe you started a Roth IRA. You probably got some index fund exposure, and if you been in the S&P 500, you would seen returns of 24% in 2023, 23% in 2024, and about 16% in 2025. Compounding is just starting to kick in. But at this level, your savings rate matters 10 times more than your returns. If you are saving $1,500 a month and getting a 10% return, it takes roughly 5 to 6 years to cross $100,000. That first $100K is the hardest. Charlie Munger said that himself, because you're doing all the heavy lifting and the market is barely helping. But once you cross it, something mechanical changes. Your money starts doing a measurable portion of the work. Here is the real shift though. At $100K, you start to think differently. You see opportunities instead of just threats. You start understanding that money isn't just for spending. It is a tool that generates more of itself. That mental shift is worth more than the $100K. Now we're getting somewhere. $500,000 in net worth puts you solidly in the upper half of American households. The median net worth for people aged 45 to 54 is around $247,000. So if you hit $500K at any point before your mid-50s, you're outperforming the average by a significant margin. At this stage, life looks comfortable, not extravagant. Comfortable. You probably own a home, or at least have real equity in one. The median home sale price in the US at the end of 2025 was about $405,000. So a decent chunk of your net worth might be tied up in real estate. Maybe you got $150K to $250K in retirement accounts and the rest in home equity and a brokerage account. You can afford a solid car, a yearly vacation, and you're not sweating the grocery bill. But here is the trap at this level: lifestyle inflation. This is where people upgrade the house, lease the nicer car, start eating out 4 nights a week, and wonder why they've been stuck at $400K for 3 years. The invisible wall between $500K and $1 million is almost entirely behavioral, not mathematical. If you got $400K invested and you are earning a conservative 7% real return, that is $28,000 a year your money generates by itself. That is meaningful, but it is not enough to live on. You still need your job. You're not free yet. This is also where the tax game starts mattering. Really mattering. Tax loss harvesting, Roth conversions, backdoor IRAs, HSA optimization. If you're not thinking about this stuff, by now, you're leaving tens of thousands of dollars on the table over the next decade. One thing that is important to understand: about this level. You feel middle class, even though statistically, you're doing much better than average. That is because the people around you are probably in a similar bracket. Your reference group, your neighbors, your co-workers, your college friends, they're all doing roughly the same. So, there is no contrast. The wealth doesn't feel like wealth, it just feels normal. And that normalcy can either drive you to keep pushing or make you complacent. The millionaire threshold. The most psychologically loaded number in personal finance. There are roughly 24 million millionaires in the United States. Right now, about 1 in 14 people. In 2024 alone, the US added over 379,000 new millionaires. That is more than 1,000 new millionaires per Dalton Y. So while $1 million is still a meaningful milestone, it is not the exclusive club it was 30 years ago. At $1 million in net worth, you are comfortably in the top 10 to 15% of all American households. But here is the reality check. In 2026, $1 million is not retire and live like a king money. Withdraw 4% per year and you've got $40,000 annually. That is below the median individual income. You're not popping champagne on a yacht. You're covering a modest lifestyle. $1 million gets you a paid-off house in most of the country, a reliable car, and a retirement that doesn't rely on Social Security alone. That is the honest truth. In expensive metro areas, New York, San Francisco, Miami, $1 million barely gets you a decent condo. But the financial mechanics at this stage are powerful. If you got $1 million invested, a 10% return year is $100,000 of growth. Your money earned more in that year than most people's salary. And this is where compounding goes from theoretical to visceral. You can literally watch your portfolio gain more in a good month than you used to save in a year. That is the flywheel effect. And it only accelerates from here. This is what I call the stealth wealth zone. You are rich by any statistical definition. The top 5% starts around $3.8 million. But you might not look rich. You probably drive a Toyota. You probably shop at Costco. You definitely still check the price before you add something to the cart. But the optionality at this level is incredible. Between $1 million and $5 million, you have choices. Real choices. You could retire early if your expenses are moderate. You could take a year off to start a business without panicking. You could send your kids to any college without losing sleep over the bill. You could walk away from a job you hate and not feel it financially. At $3 million invested conservatively, you are pulling $120K to $150K a year in investment income without touching principal. That is a six-figure income for doing absolutely nothing. That is what financial freedom actually looks like. Not a Lamborghini, but the option to say no. Most people in this bracket got here through one of three paths. Steady, high-income careers with disciplined savings. Think doctors, lawyers, senior engineers, executives. Long-term compounding in equity markets or business ownership. The myth of the overnight millionaire is just that, a myth. The National Study of Millionaires found that the vast majority built wealth over 20 to 30 years. Now, here is an interesting thing that happens at this level. The net worth accelerates. Going from $1 million to $2 million takes way less time than going from $0 to $1 million. Because at $1 million, your portfolio might generate $80K to $100K a year on its own. Stack that on top of a high income and a strong savings rate, and the compounding curve turns into a hockey stick. The risks change here too. You start thinking about estate planning. You start thinking about asset protection. You probably have a CPA and a financial advisor on retainer. And if you're smart, you're starting to think about tax-efficient, charitable giving. Not because you're altruistic, but because a donor-advised fund can save you 6 figures in capital gains taxes over a decade. At $5 million, you cross into high net worth territory, and you start getting phone calls from private wealth managers at places like Morgan Stanley, UBS, and Goldman Sachs. They want your business because at this level, you're not just a client, you're a relationship. With $5 to $10 million, you can live an objectively excellent life anywhere in the country. Not flashy, excellent. Think a paid-off $1.5 million home, maybe a vacation property, first class travel, and never thinking twice about a dinner bill. Your annual investment income, $200,000 to $400,000, exceeds what 95% of Americans earn from their jobs. This is also the zone where work becomes optional. Not in the "I hate Mondays" way, but genuinely, structurally optional. You work because you want to, not because the mortgage depends on it. That psychological switch is the most underrated perk of wealth. Stress doesn't disappear, but the nature of your stress changes entirely. You're not worried about paying the electric bill. You're worried about portfolio allocation and estate succession. The 4% rule says you can safely spend $200K to $400K a year forever at this level. That is a top -2% income without a job. Your money is a full-time employee that never calls in sick. One important note: this is where taxes can get vicious if you're not strategic. Capital gains, state income taxes, the net investment income, surtax. They all start layering on top of each other. A good tax strategy at $5 million plus can save you $100,000 a year. A bad one, or no strategy at all, will silently drain your wealth. Welcome to the top 1%. As of the latest estimates, you need somewhere around $11.6 to $19 million in net worth to crack the top 1% of us households, depending on the data source. So at $10 million, you are either right at the door or already inside. At $10 million in investable assets, you can generate $350,000 to $500,000 a year in low-risk investment income. Treasuries, dividend stocks, municipal bonds. You're not relying on the stock market to go up for you to eat. Your money works in all conditions. This is where the lifestyle options expand dramatically. A $2 to $3 million home becomes reasonable. Charter a private jet a few times a year. Manageable. Your kids' trust funds are set up. You've probably got a CPA, a tax attorney, an estate attorney, and a financial advisor, a small team working on your behalf. Between $10 and $50 million, something interesting happens. Your social shifts. You start meeting other people at this level, and the conversations aren't about budgets or salaries anymore. They're about deal flow, fund access, and which opportunity zones have the best tax advantages. The information asymmetry at this level is enormous. You hear about investments and strategies that normal people simply don't have access to. private equity allocations, pre-IPO placements, syndicated real estate deals with preferred returns. At $30 to $50 million, you might set up or participate in a family office. These are private wealth management firms that serve one family, handling investments, taxes, estate planning, philanthropy, bill pay, insurance, even travel logistics. Running a family office costs around $1 million or more per year, which is why it typically doesn't make sense below the $50 million mark. And here is the uncomfortable truth. At this level, you can make financial mistakes that would bankrupt a normal person and barely feel it. A $500,000 bad investment. It stings, but it doesn't change your life. That is the safety net of scale. This is centimillionaire territory. According to Henley & Partners, there are roughly 29,000 individuals worldwide with $100 million or more in liquid investable assets. In the US alone, the wealthiest city, New York, has about 818 centimillionaires. These are not just rich people. These are people who have exited the normal economy entirely. At $50 to $100 million, your life looks fundamentally different from anyone in the brackets below. You're not just flying first class. You're considering fractional jet ownership, or even buying your own aircraft outright. A mid-size private jet runs $6 to $10 million. A Gulfstream G700 or Bombardier Global 7500, $75 million. And the annual operating cost on a large jet is $2 to $4 million a year, which, at this net worth level, is a rounding error. You likely have multiple homes, a primary residence, a ski property, maybe a place in London or the south of France. A single family office is managing everything. You have a full-time staff, household managers, personal assistants. Security. You're not managing money anymore. You're managing people who manage money. Investment-wise, you're playing a completely different game. You have access to institutional quality hedge funds, venture capital, and direct private equity. Your returns might not beat the S&P 500 every year, but your downside protection is in a different universe. You've got alternative assets, real estate portfolios, art collections, and probably some concentrated stock positions from the business that made you wealthy in the first place. At this level, your biggest financial concern isn't making more money. It is preserving what you have and transferring it efficiently to the next generation. Estate taxes, generation, skipping trusts, dynasty trusts, charitable remainder trusts. This is where wealth planning becomes an art form. The difference between a good and bad estate plan at $100 million could cost your heirs $30 to $40 million in taxes. And here is the thing nobody at this level will say publicly. The marginal happiness gained from going from $50 million to $100 million is almost zero. Research has consistently shown that happiness and life satisfaction plateau somewhere around $500,000 in annual income. Beyond that, you're optimizing for legacy, control, and ego, not joy. That is not a judgment. That is just the data. So, where does that leave you? Here is the thing. Wherever you are on this ladder right now, the mechanics are the same. Earn, save, invest, compound, repeat. The numbers just scale up. The person at $10,000 and the person at $10 million are both running the same operating system. One just has a bigger hard drive. The real gap isn't between the income brackets. It is between the people who understand how money compounds and the ones who don't. Because in a world where inflation just hit 3.3% in March, where the S&P 500 has nearly doubled in 3 years, where the average American is carrying over $105,000 in total debt, the difference between understanding these rules and ignoring them is the difference between financial freedom and financial prison. You don't need to make $100 million, but you do need to know how the ladder works. Because once you see it clearly, every rung, every trap, every inflection point, you stop climbing blind. And that is the whole game.